Gold prices fell alongside stock markets and bond prices on Wednesday, trading 1.3% below last Thursday's new all-time high, after rallying but failing to top that record against a rising US dollar on news of Iran firing ballistic missiles at Israel in yesterday's dramatic escalation of the Middle East conflict. In the immediate term, claims a note from analysts at Canadian brokers TD, the prospect of a direct confrontation between Iran and Israel is driving even more capital towards gold. But investors have continued to take profit on gold at the latest new highs, while consumer gold demand has been crippled worldwide by this year's surging prices, says Reuters. Having slipped from last week's new peaks in gold, the price of bullion spiked to new highs in euro and UK pounds on Tuesday's Iranian attack, thwarted thanks to Israel's air defense array, according to Prime Minister Benjamin Netanyahu, with no injuries reported. But gold failed to make a fresh record in most other currencies, including the Israeli shekel and the Canadian, as well as US dollar. The way we look at it, says Swiss banking giant and London Bullion Clearing Bank UBS precious metals strategist Joni Teves, geopolitical tensions add to a list of reasons why investors would want to hold gold as part of their portfolio. But the immediate price reaction is not really straightforward. With gold trading almost $10 lower per ounce from yesterday at $2,658 around London's 3 p.m. benchmarking auction, Western government bonds also fell in price Wednesday. That pushed 10-year US Treasury yields up to the highest in a month at 3.81% per annum after the ADP payrolls report said the world's largest economy added the most jobs in 3 months in September, denting expectations for another steep cut to dollar interest rates from the Federal Reserve. Global stock markets slipped too, hitting one-week lows on the MSCI World Index after the US S&P 500 index dropped on Tuesday from the prior day's fresh all-time high. Gold and the US stock market have rarely been as closely correlated as they are today. Tracking the strength of their co-movement day by day, the 12-month R correlation of dollar gold prices with the S&P 500 now reads plus 0.90, the most positive one-year relationship since the 250 trading days ending May 2011. That correlation has only been greater on 130 of the past 13,484 trading days, first in the run-up to the USA abandoning the dollar's gold convertibility in August 1971, then during the stock market's steep rally from the dot-com crash in 2004, and then as gold approached its financial crisis peak 13 years ago. While gold bullion has set 30 new dollar records in 2024 so far, beating all full-year totals except 1979's run-up to the big 1980 gold top, and then 2011 and its run to $1,920, the S&P has set 43 new closing highs. The S&P 500 has now risen 20.4% year-to-date. The price of gold in dollar terms has risen 8 percentage points faster. Giant gold-backed ETF trust fund, the GLD, expanded by 0.3% on Tuesday, putting its number of shares in issue at the highest in 3 sessions. But the world's second-largest gold ETF, the iShares IAU, was unchanged after shrinking towards to a 2-week low in size, and investors using BullionVault continue to take profits on gold as a group, mapping the wider liquidation reported by coin retailers across Europe and the US. Ahead of this Friday's government estimate for September's US payrolls growth, US job openings rose in August according to yesterday's JOLTS data, but construction sector spending fell on the Census Bureau's first estimate. Vehicle sales jumped in September, says Motor Intelligence Research, but manufacturing activity across the world's largest economy shrank for the 6th month running on the ISM's PMI survey, with the sector's new orders, employment and prices paid all lower. Jumping to a new record €2,419 per ounce late Tuesday, the price of gold in euros today slipped back below €2,400. The UK gold price in pounds per ounce, meantime, slipped back below £2,000 after spiking to a new high of £2,419 on yesterday's Iranian missile attack. Silver held firm than gold, trading unchanged for the week so far around $31.65. Iran made a big mistake tonight, and it will pay for it, said Israel's Netanyahu on national TV after yesterday's missile attack. Tonight's operation will be repeated several times stronger, said Iran's Armed Forces Chief Major General Mohammad Bagheri in Tehran, saying that the attack was provoked by Israel's military attacks on Lebanon, aimed at destroying the Hezbollah militant group while it continues to bombard Gaza in pursuit of Hamas. U.S. naval destroyers joined Israeli air defense units in firing interceptors to shoot down inbound missiles, said U.S. National Security Advisor Jake Sullivan, while U.S. President Joe Biden pledged ironclad support for Tel Aviv. Please like this video and subscribe to our channel.